by my watch, it's now 11 o'clock. So thank you for the people that have joined us this morning. So for those of you who don't know me, my name is Simon Courtney from RMS Partners. We are the investor relations consultancy that work alongside the team at TClarke, helping to promote the stock and promote the company to the investment markets. So thank you for joining us this morning to this online presentation. Joining me on the call is Mark Lawrence, Group Chief Executive, and Trevor Mitchell, Group Finance Director. They're going to be doing the bulk of the talking. And the way that we're going to operate the call today is that we're going to share some slides on screen. Mark and Trevor are going to talk us through the performance of the business over the last year, and also how the outlook looks for the future, and also take you through some of the activities on projects that they're currently engaged with. So this obviously follows the announcement of the company's full year results that were announced to the market on Wednesday. You will also find a lot of detail available on the investor relations section of the TClarke corporate website, including a copy of this presentation. So if you want to flick through the slides afterwards, it is available to download. And it's quite a simple address, www.tclarke.co.uk. Lots of information on there about projects and activities and about the team. And also this presentation will be in the investor relations section. So the way that we're going to run this call today is we're going to start with a short video that just talks about TClarke and explains more about the strengths of its people and also its processes and how it gets involved in various projects. That's going to take about a minute or so. And then we're going to turn to the presentation. Mark and Trevor will run you through the presentation. And then we're going to leave some minutes for a Q&A session at the end of that. There are two ways to ask questions. You can either type them into the Q&A button at the bottom of your screen. And then when we get to the Q&A, I can read those out so that everybody on the call can hear, and Mark and Trevor can then answer them. Alternatively, if you'd like to verbally ask your question, there's a raise hand emoji at the bottom of your screen, looks something like that. If you click on that, we can see that you would like to verbally ask your question, and then I can unmute your line, and then we'll be able to hear you, and you can, as I say, verbally ask your question. So I hope that's clear. Don't worry if it's not. I will be repeating those when we get to the Q&A section. So without further ado, we're now going to go into the video, and then we'll run the presentation after that. So Adam, who's running the slides, if you can now run the video.
Welcome to TClarke.
At TClarke, we always aim to be
First choice contractor.
First for safety.
First for resources.
For leaders.
For learning.
For career path.
For apprenticeships.
For well-being.
First for engineering.
For expertise.
For collaboration.
At TClarke, we always aim to be the first for technologies.
For modern methods of construction.
For innovation.
For integration. First, right across the UK.
For landmark projects.
For communities.
For quality.
For service.
For people.
And right now,
we are following a £500 million revenue roadmap.
Across the country.
Creating and securing
real engineering careers.
in all our local communities.
With a sensible expansion strategy.
Building on an established business strength.
With target growth from new revenue streams.
TClarke, the skill and resource.
The quality
and the attitude
to sustain excellence.
To build growth.
The TClarke way.
Super. Thank you, Adam. And now we're going to put the presentation slides up, and then we can start running through the presentation. So the slides are now up. So I'll now hand over to Mark and Trevor, and we can start the session and the real meat of the session. So over to you.
Good morning. My name is Mark Lawrence. Thank you for joining us this morning. You can see we've got some existing shareholders, some new shareholders, some employees, and some friends of the business joining us. So hopefully we will give you an informative update to what the business has been performing over the last couple of years. If we could move to the infographic, please, Adam. So this slide gives you a overview of the business. For people who are not familiar with the business, we operate right across the UK. We operate from 20 locations, and we manage our business in 3 geographical locations: London, UK North and UK South. And you can see that we can service the whole of the UK from our 20 locations. We don't aspire to be in every town and city in the UK, but we mirror where our client base is, where our principal contractors operate from, and where we see potential for growth. Uniquely, I think we're one of the only M&E contractors that offers such complete UK coverage, offering our clients a one-stop solution for mechanical, electrical and technology offerings. Approximately 90% of our turnover in 2021 was with repeat clients of one shape or another. You can see on the graphic on the right is our accident reduction program. You know, we work on construction sites, and our number one focus is on ensuring that our people work in a safe, healthy manner. And you can see there's a lot of effort goes into ensuring that our accident statistics mirror our focus on health and safety. We're a direct employer of apprentices. As you can see, one of the facts on that page, 16% of our workforce are apprentices. We offer young people a great career path, not only as electricians and plumbers, but they can offer career paths spanning complete ranges of our business, such as design, commercial, project engineering. Our revenues have bounced back from pre-pandemic levels. And what we set out about 18 months ago was to put TClarke on a step change. We are hovering around £300 million of revenue, and we couldn't break above those barriers. So the board set out a strategy to focus on what we do best in terms of M&E contracting and certain sectors that we target. But we wanted to grow to 500 million, but not at the loss of profit. So our strategy is very simple: to get to 500 million, maintain 3% margins, pay a progressive dividend, and allow people to have a good career path and career progression with the business. If we can turn to the next slide. You would have seen our RNS announcing our 2021 results early this week. This presentation will take you through a number of areas, but we will highlight the numbers, which Trevor will take you through in a moment. We'll tell you how the £500 million strategy is progressing. We'll talk you through our order book and opportunities, and we will cover off risks which are very much at the forefront of people's minds at the moment, such as inflation and material and wage increases. But if I hand over to Trevor now, he can take you through some of the numbers that underpin the business.
So, turning to revenue, our plan for 2021 was to restore revenues back to their 2019 levels. 2019 represented a high for the business, where the revenue was around 334 million. So we've got back with revenue being 327, and importantly, second half revenue was roughly 190, and in the last quarter we produced about £100 million revenue. So we go into 2022 at a run rate of £400 million. Whilst doing that, our margins in the second half hit 3.3%, first half were 1.7%. So our overall margin is 2.7%. And one of the key things as well for 2021, we have no non-underlying items. So underlying and total profits are the same. We move to the next page. You'll see that our revenue has grown across all our sectors, but in particular, technology is starting to move ahead, and that's being driven by data centers. Mark will go into that in far more detail further through the presentation. And as I said, any comparative to 2020, if we're looking at total, like total profits, total earnings per share, there'll be big increases because of the no non-underlying items, and that's what we expect moving forward. 2020, we did have some non-underlying items because we restructured the business as we entered the pandemic. So again, moving forward again, you can see that TClarke always manages to turn its profits into cash. So last year, our operating profit did turn into cash, and then part of that profit was used as a rebasing of VAT. The VAT regime for construction business changed from the 1st of March. So we used to pay over about £3.25 million a quarter of VAT to HMRC. Now we are reclaiming on a monthly basis somewhere between £500,000 and £1 million. So that's caused a once-off reduction in our cash balance of about 4 million. We're also working hard to try and pay our supply chain faster. So our average payment days have come down from 69 to 60. Our average payment days are dominated by our material supply chain, the way it's calculated. And that's what's driven that cash being used to fund working capital. Dividends are the next biggest use of our cash. Our dividends now are approaching 2 million. And then within the other, the biggest item there is our contribution, our annual contribution to our defined benefit pension fund, where we're contributing an extra £1.5 million a year to fund the deficit. Our year-end cash was 5.3 million net cash. And on top of that, we have 25 million of facilities that are available to us. And in fact, our January cash was higher than our December cash. And then looking at the balance sheet, I guess apart from obviously the profits coming into the balance sheet, the main feature is we have a sizable pension deficit on our defined pension benefit scheme, but that's dropped significantly in the year, driven from an increase in long-term interest rates in terms of the assumptions. And then we come to dividends. So TClarke has a progressive dividend policy. We have been increasing our dividends by approximately 10% a year. The only year where we haven't done that over the last 5 was the year of the pandemic in 2020, where we held our dividend, but we still paid out our full dividend. Looking at dividends, I think the board does have an intention to rebalance dividends between interim and final. So I think you might see the 2022, any increase going on to the interim dividend. And when you think of dividends and you think of share price in terms of total return, at the start of this graph, at the end of December 2016, our share price was 59.25p. At the end of December 2021, it was £1.60. If you add in the dividends, that actually means that the return to shareholders over that 5-year period has been 205%, which I think you'd agree was a pretty good return. And you can see that just reflected in this graph. This is an index of how TClarke's share price has performed relative to the all-share index. And then finally, for me in this section, a look at our strategy. So 2021 was all about re-establishing, if you like, our 300 million, 330 million normal sort of turnover. We've been around that level pre-pandemic for a few years. We were doing that by focusing on our 5 chosen markets and by expanding our data center business. Obviously, TClarke is not all turnover driven. A few years ago now, we established a target to maintain a 3% operating margin. We were 3% in 2019, 3% for 3 of the quarters in 2020, not the second quarter where we were break even. And as you see in 2021, with revenues most definitely restored in the second half of the year, we achieved 3.3%. Mark will go on a lot more in terms of our markets, but our strategy is all about maintaining our premier position in our chosen market sectors, and then by expanding our business organically. And we're looking at 4 key sectors: data centres, large projects outside of London, healthcare, and our smart building solutions. And it's very much data centre growth that's driving our growth at the moment.
Okay, so why would you invest in TClarke? Anyone who invests in the construction sector is usually wary of the cyclical markets that we operate in. Part of our strategy to get to £500 million was to ensure that we've got a balanced portfolio of business in terms of the markets we target. This is a snapshot through our forward order book. And an important comment about our forward order book: we only quote a forward order book figure if the job is secured. So that means we have a piece of paper, a contract from a client to progress. So there's no soft orders, there's no fluffy bits in there. These are jobs that we have secured and are in various degrees of being built out. So these are our 5 target markets that build the business. So engineering services would be the old-fashioned M&E contracting, and you can see it's made up of commercial offices, leisure, retail and type schemes. And as you can see, forward look compared to this time last year, it's remained stable, which is exactly the strategy of the business. So our existing business streams remain stable. Technologies is where we see a great growth of the business. So this houses data centres, smart building opportunities. It also houses our prefabrication facility that I'll touch upon in a moment. Infrastructure, also known as public sector type works. This is where we see works for defence, education and healthcare, prisons, etc. Interestingly, we've done about 10 of these roadshow meetings so far in our rounds, and a common question we've been asked: have we seen any effects of the levelling up agenda feeding through to our order book? And as we sit here today, we don't think we have. Most of the public sector work we've had has been born out of existing contracts. We do have some opportunities for some of the new 40 so-called hospitals, but none of those are translated into a project yet. But as you can see, our forward order book in that area, is pretty healthy, and then the amount of schools and education establishments we're doing up and down the country is quite significant. Residential and hotels, another area that has remained solid to us. We're working on 3 or 4 hotel schemes in London. We're one of the biggest, if not the biggest, of M&E service providers to house builders in the Scottish market. We also have good framework agreements with the likes of Berkeley Homes and St George's, etc. FM, facilities management, is a smaller part of the business, but it does give us some, solid reoccurring revenues. So the interesting fact to take away from this one, you can see the existing parts of the business have remained solid, but where we're focusing on new areas such as technology, you can see the comparative in the order book is beginning to take shape. Now, one of the other questions we get often asked is, because we do some landmark schemes in London, do they carry high risk? Are they all high value? As the next slide shows, it's not all high value. There is a broad range of projects that make up our order book. But what we will see over a period of time, the smaller ones will probably move up to the medium-sized projects as we target bigger projects outside the London market. So that's a very simple cut through the order book. So you can see we do have some reasonable amount of projects above that £25 million mark, but we have a range of projects at the lower level as well. And again, all adding to a broad range of offering in terms of what we target in markets and the scale of jobs that we operate in as well. So the next slide is a graphic that shows the £500 million revenue roadmap. Now, it's very easy for a business to say we want to get to 500 million, we want to get to $1 billion. So TClarke's strategy is very, very simple. We were delivering 330 million pounds of revenue pre-pandemic. And that was a level of revenue that a business could year in, year out generate. And that was focused around those 5 sectors that I've just taken you through. So as a strategic move to step the business up, we were looking at areas that we felt would stay true to the strengths of the business, i.e. M&E and technologies. And we looked at 4 areas that we've now rolled out. So larger projects outside of London, smart building, associated with sustainability as well, healthcare projects and data centres. Data centers I'll take a bit more detail about in a moment, but examples of large projects outside of London. Our bases in Manchester have expanded rapidly to offer more M&E services. Our offices in Peterborough, Newcastle and Falkirk used to mainly focus on electrical projects and partner with mechanical contractors. We've now expanded their resource in-house and they are now offering the full range of M&E services, but more importantly, without going down the trail of the risky acquisitions. We've done it organically by acquiring the right people. So you can see the ability to get from 330 to 500 in a step change is readily available. One of the other questions we get asked about is resources. How can we resource these in terms of our people? So as I said at the beginning of the presentation, TClarke is a strong believer in recruitment of apprentices, but also we're seeing more university graduates come in to support us in particular areas. As I said earlier, our young people will join us and we offer them a wide range of career paths that will support the business. But obviously, as an engineering firm, we need guys who are on the ground. We need electricians, plumbers, and technology engineers who are physically installing the works on building sites. And how we've supplemented our resources there, we've invested a few years back in a prefabrication facility at Stansted. And if we turn to the next slide, Stansted offers us our selling point of how we adopt modern methods of construction. So we have a 52,000 square foot facility in Stansted that can offer clients the ability to prefabricate huge chunks of their installation off-site. The picture you see on the right there is a part of the installation which was built at Stansted. So those modules come in 4 or 5 metre lengths, all prefabricated in a factory environment, which probably needs a ratio of 1 to 10 less guys on site because it's done in a factory environment. The factory environment leads to more quality. The factory environment leads to less waste. And it's built to a tighter program schedule that can improve program deliveries on site. That project there is the Google project at King's Cross. That corridor, if you can imagine the shard on its side, the length of the Google building at King's Cross gives you some scale of that project we're delivering there. Also, what we do at Stansted, if you turn the page, we offer things like pump skids. So huge plant rooms can be prefabricated, again, in a factory environment, shipped to site just in time to meet program deliveries. And what you see on the left there is what we offer our residential clients. That is an example of a utility cupboard. So everything that services the residential flat, apartment, etc., can be built up in an off-site facility, pushed into place, and it is literally left to the final connections being needed on site. That has meant that we can take on far more projects, needing far less resource on site. But having far less resource on site, as I said, helps our quality, but also helps our health and safety record. We've got less people on site, on a building site. We're controlling more of our activities for the factory type environment. So I think that's an important one to sort of know how we can take on additional revenues and service our clients and their projects. So giving you a good example how the growth to 500 million will be serviced by one of our new target areas. These data center projects. And we're usually bound by non-disclosure agreements, so we can't name who we're working for, but data centers are either run by end users of big multinationals you're aware of, or they're run by companies who sublet space to people requiring data. And as we know by our own consumption, data is only going one direction. But here's some good examples where our strategy is played out. We set ourselves a target of going secure data centers. We've actually got 5 on our books, but we've done a snapshot of 3 of the most significant ones. So project 1 was working its way through our order book last year. The first phase comes to conclusion in March. We are negotiating the second phase, and we're about to hit the ground physically on site the latter part of this month. So you can see how one project has gone to double in size by our ability to deliver. And more importantly, the scale of those jobs means that some of our smaller competition are barred from entry to it. They haven't got the resource and they haven't got the financial clout to be able to finance those projects. Project 1, for example, towards the end of the year, we had 200 skilled operatives on site, and they will roll on to phase 2. Project 2 is one of the largest projects that Clarke's has ever secured. That is on site now, and as you can see, there's an opportunity for an additional £23 million worth of work to come into play later in the year. Project 3, at the time of producing this graphic for the end of the year, we'd secured 16 million. We've now already secured the additional 15 that you see there, and the further 15 we're very confident of winning. But more importantly, where does that leave us for next year? Well, you can see 4 projects that we're targeting, one of which is a repeat client from one of the projects above. You can see if our normal win rate of 1 in 3, 1 in 4 projects is achieved, we will more than replenish our workload in that sector next year. So we see no shortage of opportunities in data centers over the next 2, 3, 4, 5 years in this country. We have previously said there's an ambition to work in Europe in data centers. We've got no desire to go and start building office blocks in Paris or Spain and places like that. But we will move into the data center market, but we'll partner with a client who will take us into that market at the appropriate time. I think that really does explain, how the business is focused on a particular sector, which will give us growth, it will give us revenue improvements, and will lead to an improved blended margin as well. Another area of opportunity, if you go to the next slide, is sustainability. Now, we could have done a slide that shows we're going to get to net zero in a short space of time. We're going to change all our cars to electric, etc. To be honest, we're not going to change all our cars to electric because they don't have the range of where we need to go. So we are doing the appropriate things to get to net zero. But more importantly, this slide shows you the opportunity for the business. For a business that's grounded in M&E engineering services, this slide will be at home, reflecting a commercial scheme, a residential scheme, a new building or refurb. So any new building we're doing, a lot of these sustainability targets will be embedded in the current design, all to deliver the most efficient building that a client wants. In terms of refurbishment, a lot of our clients will be forced to upgrade their stock, otherwise they could be left with a stranded asset. So for us, there's opportunities in new build because this is all reflective of elements that come into our package. In terms of refurbishment, with our smart building, our smart technologies team, we can lead and educate clients of what opportunities are out there. We have several partners that service different client needs depending on their budget and depending on how efficient they want to get to their system. But more importantly, if we're involved with refurbs, that can lead to additional revenue streams for the wider business. We're involved with 2 solar farms for financial institutions up and down the country. Heat pumps, for example, as I said earlier, our residential team in Scotland are one of the biggest providers of M&E services to house builders in Scotland. We installed about 400 heat pumps last year. They run at a budget of about £5,000 each compared to a £1,000 gas boiler. So you can see how revenue streams will increase as a result of sustainability. But for the business, we've said we can be a one-stop solution for ME and technologies. But more importantly, if we don't secure the mechanical package, we don't secure the electrical package, we could well win the technology package, which is giving us ever improving revenues as well. So I think, there's a couple of good examples in terms of data centers, smart buildings, where the business is focused on areas that will give good reoccurring revenue, but in revenue opportunities right across the business as well. If we turn to the next slide, we felt it was important not to shy away for risks. As I said earlier, to invest in a construction company, you need to understand how the sector works. Our annual report will come out in a few weeks' time, but we've just highlighted a couple of the principal risks that the business challenges. This business is 130 years plus years old, and every one of those years is a school day in terms of learning, improving our process. And the whole journey of how we target jobs, bid a job, execute a job on site, complete the final account, and ensure we leave a happy client is built upon processes that are the same in London as they are in Scotland, as they are in the southwest of this country. A TClarke engineer operative can walk onto any TClarke site, and the process we follow throughout that journey is exactly the same. We delegate responsibility to our local businesses to target projects and in their skill set. If there are projects outside their skill set, they will come back to the centre for a discussion. We will allow them to target jobs well in their comfort zone, but if it's a different type of project, we will discuss it. So the principal risks that you can see on that screen, in terms of construction activities, they're not unheard of in where failures happen in construction. Project delivery for us is built upon understanding the client's requirement, understanding how the program works, and ensure we keep our client abreast of what we're doing on that site all the way through. I think the one area that we need to sort of highlight where we are, dealing with material availability and inflation. So in a very simple manner, as soon as we secure a project, we will go out and secure the materials. We bid our projects over an 8-week period, or whatever the tender period is. We'll go through a post-bid interview process, some to and fro on the terms and conditions, etc., and then we will secure a project. At that point, the tender would have been made up of fixed price quotations from our supply chain. We will go in and lock in that material at that price, if not better. So from day one, the team are tasked with buying materials, and our supply chain will lock in materials for the duration of that contract. And that does include copper, that does include steel containment, it does include big items like switchgear, chillers, light fittings, etc. So for us, we don't task ourselves with trying to guess where copper and steel is going to go. We de-risk it as quickly as possible. Well, we are wise to and alert our materials availability. And again, this is where program and planning comes into. We keep our clients abreast of when that material is available. We employ very technical planners who plan the job with great precision of when items which are now in extended deliveries will hit the ground and we can install them. So for us, we've not been affected by project deliveries, project delays caused by deliveries and material availability, but it's very much on our risk register and very much alert to where it could be. And attracting and retaining people, without sounding arrogant, anyone who's got a TClarke CV, he wants to be scooped up by our competition, and LinkedIn is a nightmare for that process of people hawking our people. But we offer, as I said earlier, good career paths. There's no glass ceiling of where your career can go at TClarke, and we obviously work on some of the most iconic jobs across the country. Our retention rates are one of the highest in the industry, and we think that's down to the way we treat our people and allow them to get on and do their job. And the last few slides, again, investing in TClarke is about confidence and understanding what we do. But we've just got some examples, and we won't talk through every single picture you're going to see on the next few slides. But these are some of the current projects in London that we're working on. So IQS S4 is at the Stratford development on the Olympic Park. It's known as the International Quarter London. S4 is the 4th project we're doing down there. We competitively bid the first phase, and we have subsequently negotiated the next 3. Bankside Yards is a native land development. We're working with Multiplex. Ruskin Square and 8 Bishopsgate are both Stanhope development contracts. 8 Bishopsgate is with Lendlease, as is Ruskin Square in Croydon. And we're doing the second phase for Ruskin Square, which having completed the first phase a few years back. Canada Water, we've secured the first phase, the first commercial office block, which is British Land's redevelopment of the Surrey Quays Canada Water area in South East London. And then down at Wimbledon, where they're expanding into the car park opposite the tennis grounds there. We've got an infrastructure project that we're doing there. So a good snapshot of what's going on in London. UK North, 2 slides for UK North. As we said in this presentation, we're targeting bigger projects outside of London, and you can see a mix of commercial, public sector and residential schemes. And if we flip the page, same picture in our Scottish offering in Scotland, jobs right across the Edinburgh, Glasgow and Central Belt there. UK South, again, same picture, a mix of work. We are not dependent on one particular sector, which pans out, and it's the whole presentation that the business is very focused on having a broad portfolio of work. But where does that take us next? Opportunities are key. At any one time, we've probably got about £1 billion of bids that we're either physically bidding or tracking. And here's some good examples in London. So Citibank, the refurbishment of that building top to bottom has been awarded to Overbury, part of the Morgan Sindall Group. That is a current live tender for us. That'll be worth circa £50 million plus if we secure that. The Edge London is one of the most high-tech buildings they're building just outside London Bridge. 100 Leadenhall, a scheme by Brookfield Developments. Salisbury Square, 3 large buildings in the City of London, which will house the City of London Police, their terrorist squad, and a commercial office block with a common basement, now been awarded to Mace. And the ITV studios on South Bank are due for redevelopment as well. Now, obviously, commercial offices have been a big part of the London business. And the question is, are people concerned about where we're going with that? Interestingly for us, our commercial offering, if we'd had this conversation 10 years ago, it would have definitely been built with banks and financial institutions. Some of the biggest commercial schemes we're doing at the moment are for people like Apple, Google, and Facebook, who are building huge campuses in London. But obviously with Citigroup, you can sort of see there is still significant confidence in the London market. So again, a broad portfolio. If one particular sector drops off a little bit, we are confident that other bits will pick up. And some other examples in London, if we turn the slide, Aldermanbury Square is a GPE job. We've just finished two sequential jobs for GPE in the West End. And this is another scheme just been awarded to Lendlease. One undershaft is in that skyscraper cluster in the city. Finsbury Avenue is the next one to be built out on the Broadgate estate by British Land. And Dungeness Power Station, whilst that power station is switched off and is no longer generating power, there's about a 50-year wind down process for that, and there's still significant opportunities. We've done £60 million worth of revenue at that power station last year. And a question other investors ask us, are we interested in building brand new power stations? Generally, the answer would be no, because we don't want to subsume all our regional office into one particular project. We would rather allow other people to do that type of project and concentrate on what's out in the regions and still have a business on the other side of a power station being built. But Dungeness, in terms of scale, we've been there for many years and continue to see numerous opportunities. And if we repeat that picture across the country, UK North, you can see again a mix of work that our businesses are targeting. Again, as I said earlier, nothing really in the levelling up agenda, but a mixture of commercial opportunities as well as public sector. Similarly, if we go to the next slide, you'll see Scotland again, what we offer in Scotland. And interesting for Scotland, Scotland was very, very concentrating on doing residential schemes. We've expanded the team up there and are now winning and targeting additional M&E type projects to broaden and balance that business. And UK South, which is all the way from St Austell in Cornwall right up to Derby. You can sort of see the opportunities they've got there. Continues on the next page as well. And the Hendon scheme, as I mentioned, we've got a great relationship with St George's and Berkeley Homes, and we've done a number of the Hendon schemes, which is on the old site of the old Metropolitan Police Training Academy. So that's a snapshot of the business. I think it's trying to underpin the confidence, as the summary slide shows. We've got a strategy. We think we are a market leader in what we do. If clients can afford TClarke, they would have TClarke on their project. We do have competition, but we think we tend to be selective of what main contractor, what type of competition we're going up against. And I think that our reputation that speaks for itself in terms of our repeat business, but we continue to work hard and try hard. An important thing which is repeated there, which we said earlier, this growth to 500 million is done with no acquisitions needed or expected. We are avoiding the baggage and the risk with acquisitions that some people choose to go to. We think we're in great shape. Obviously disappointed by the circumstances that are affecting Eastern Europe, and obviously having come out of COVID in good shape as well. This business is very much focused on the future, and welcome your questions on the back of that presentation.
Super. Thank you, Mark. Thank you, Trevor, for a very comprehensive run through of the business and where you sit. So now we've probably got about 15-20 minutes left of time for Q&A, and I'll just give you the instructions if you're latecomers about how to run the Q&A. So there are two ways to do this. You can either type your question into the Q&A function at the bottom of your screen. I can see those and then I can read those out so that Mark and Trevor can answer and everybody can hear. Alternatively, if you'd like to verbally ask a question, use the raise hand emoji, and then we can see that you'd like to verbally ask a question, and I can open your line one at a time so that people aren't speaking over each other. So I hope that's clear. We've got 3 questions in the Q&A bank already, which I'll start with. So this first question comes from Jason Nightingale. So thank you, Jason, for your question. Is about the share price. and he says, I know some companies may not be too concerned on large movements in the price and stay concentrated on running their business. But as a shareholder, I was wondering whether there'd be times when the company would consider buying back its own shares when they consider them cheap to do so. The share prices range from £1 to £1.80 over the past 12 months. Thank you.
So the short answer to that is, at the moment, we are focusing on using our cash to expand our business. We think achievement of the £500 million plan should pay dividends in terms of the share price. We expect that plan to generate cash. So, once we get past this planning cycle, we'll look at that and we'll look to see whether or not the company has got excess cash, in which case buying back shares is an option. But at the moment, we're using that to expand our business.
Okay, thank you, Trevor. Moving on to the next question. Again, this comes from Jason again, and I think you've covered some of this during the session, but he asks whether you can just explain a little bit more about how you maintain your margins with the ever increasing costs going forward.
I think Mark touched on this. What's really important for us is that we procure at the time we win a job. So we're protecting our margins effectively from inflation by procuring as soon as we get our orders. The other thing is, obviously, we have a fair idea where staff costs are going to go over this period, and we build in our expected inflation into our bids. But as I say, key to our business model is placing our material orders when we get the job and not trying to speculate where material prices may go to.
Super. Thanks, Trevor. And then moving on, this is a question that's just popped into the Q&A bank. This comes from the line of Keith Billingshurst. Oh, sorry, I've pronounced that wrong. Keith Billinghurst, no S, apologies. I understand your policy of securing supplies as soon as you receive a firm order. However, the Ukrainian situation appears to be an example of how unexpected issues can cause problems. To what extent do you ensure your suppliers operate similarly?
So over the last 2 weeks, our QA department have been undertaking a audit of our supply chain and our materials availability. Some of our clients have actually requested information as well as where the supply chain goes. Obviously, the headline person you're buying it from may go deeper, and before you know it, you've ended up in Russia. So we have done an audit over the last 2 weeks, as I said. We've not seen anything thrown up that gives us concern that's going to cause us problem with our supply chain. We run a fairly tight supply chain in terms of equipment we buy and components we buy. So we're pretty relaxed that we've already taken proactive steps to safeguard that. That's not to say, example today, some of the Russian tankers that are being stopped may not have a Russian goods on it. They may have a flag and convenience and have goods from Europe on it. So this will be an evolving situation, but we have taken proactive steps to audit our supply chain.
Super. Thank you, Mark. And looking at Stansted, your facility there, with your ambition to grow revenues to 500 million, would you look to open another Stansted type facility elsewhere in the country to help support that?
The beauty of Stansted is it can operate 24 hours a day. We currently work one extended shift at the moment. So Stansted has a great deal of capacity to service the southern part of the country. We would only look to expand a Stansted to in the northern part of the country if we secured revenues and projects of the scale we receive in London. At this moment in time, we could operate a similar quality level with partners in the north.
Okay, thank you. And moving on, just for some of the people in the audience, can you just talk a little bit more about what smart buildings are and why they're so important for TClarke?
The importance of smart building is most people don't actually know what they want at this stage. It's like your app on your phone, you don't know what you want till you see it. So we are in a transition period. The drive to net zero is throwing up a lot of things in terms of energy consumption, space consumption, and there's a whole raft of technology that will help a client, a developer, a building owner understand how his building works and the functionality of it. So we didn't participate with one technology partner. We have participated with 3 or 4 technology partners to offer clients with varying opportunities in terms of budget. What we aim to offer is a client a building is smart ready. And if you align that to, say, a Sky subscription or a Netflix subscription, we install at day one a very basic network that facilitates the building and allows it to operate. And as tenants or clients move in and they want a bit more, we could turn up that subscription and offer more functionality and more elements to control that building. So the drive to make a building smart, is done at day one to make it smart ready for very minimal cost, but open it up to technology as clients come in and their changes and their requirements come in. I mean, an interesting one through COVID, and people want to have less space. What people don't actually know is how they utilize space in their office. So technology now is very much geared to understanding how many people are actually occupying an office, so the use of space can be more proactive. But what we are seeing is, as a result of COVID and encouraging people back to work, that the office space needs to be more open and willing to people to come back. It won't be rows and rows of battery hen desks. It's more collaborative spaces. So smart will go, far, far into the future where revenues are. And, an analogy, if you took a TClarke brochure from the early 1900s, it would have said we were a state-of-the-art contractor putting cables in wooden trunking. We are at the forefront of where technology will take us and where the evolution of TClarke will go. The mechanical, electrical offering is core, but technologies will be an ever greater part of the business.
Super, thank you, Mark. And moving on to other questions that people have typed in. This one again comes from Jason Nightingale. Thank you for the question, Jason. What would happen if supply shortage somewhere delays a project?
In contractual terms, if we're being brutal in contractual terms, if it's our fault, then the client could take action against us. If it's a preceding trade's fault, then we could have recourse after them. Our mitigation for that is that we employ some experienced planners who map out our journey on a project in great detail that actually has our dependencies and also the dependencies of other trades locked into that program. So if things change, we can recast the program to see if it affects the critical path or things can be rejigged around it. As I said, up until now, whilst things, light fittings, particularly the chips in light fittings, are on a longer extended delivery, it's not affecting our progress to perform because it's been built into the critical path of the projects.
Okay, thank you, Mark. Moving on to the next question, which I think comes from John White, who declares himself as a shareholder. For the critical function of estimating, presumably you do not have suitable people in all 20 regional offices. So how does that work? So
many years ago, the business invested in an IT solution. So all the critical back of house functions can sit on a commonly used platform in the construction industry. We have a facility in Derby that handles all our central processing for payroll, procurement, and a lot of the finance functions. So our offices you see across the UK, the majority of the larger ones are engineering and estimating hubs. So we do have local estimators, but what they do is they feed off of the central system for cost advice and prices of the equipment that we use.
Okay, thank you. This one I think we've already covered, but if you've got any further comments on this, this comes from Matthew Groves. How do you expect your own staff costs to progress this year?
So in terms of engineering staff, we reviewed salaries last September, slightly ahead of where we would have normally reviewed them in January. So that was reflected in an increase in September for those engineering staff and general salaried people. Our operatives, the electrical operatives, are bound by a industry and union agreement that runs through to the end of next year. So again, we have visibility of where our labour costs are going, and that's all fed into our tenders as we're producing them now, as is increased cost for materials.
And changing the subject to look at data centres, have you been asked by any of your clients to take your skills overseas into European markets?
Yes, we've actually bid a couple of years ago. We bid a data centre which was closer to the Russian border. So luckily we literally dodged a bullet there. Look, we've said we will go into the European data centre market at the appropriate time. We think at the moment there is enough opportunity in the UK market to fulfill our ambitions, but there's every chance maybe towards the latter part of next year that we will refocus on European data centres, but we would want to do that with a known trusted partner. We wouldn't just enter into the competitive market arena.
Okay, thank you. And this question, which comes from an anonymous attendee, which is fine. You can write anonymous questions, that's fine. This one, cost-based split for labour and bought out, and any pass-through revenue.
Okay, I'm not quite sure what that's meant by any pass-through revenue. Our payroll costs just under 80 million, and our procurement costs, which is predominantly materials, are around 240 million.
Super, thank you, Trevor. And if we can just turn to the apprenticeship programme, can you just explain to the people that have joined the call a little bit more about why you put so much faith in apprenticeships and what you offer them, and what they get out of the apprenticeship programme, please?
I think the apprenticeship scheme does turn out some good people sometimes. We, as the figure said earlier, we employ around 16% of our workforce in apprenticeships. Look, the key to TClarke is when we secure a job, a lot of it is driven by price, a lot of it is driven by other aspects of what we do. And a great part of securing a job will be the strength of the team. And the team will have to go through an interview process with a client, and they will understand the makeup of our team and how it is. And there's nothing better to be able to present to a repeat client the team of his choice that client has worked with before. So for us, having our own homegrown people, we can select the right people for the right particular project. Our teams go through a 4 or 5 year apprenticeship scheme. At that point, they're offered opportunities. As I said earlier, we obviously need a bedrock of them to want to continue to be our electricians and plumbers on site. We offer them opportunity to be site supervisors. We offer them opportunity to be project engineers. Some of them want to go off into design. Some want to go into commercial aspects of being a QS. But that opportunity is there that they don't necessarily realise when they walk through the door of TClarke, but then also work on iconic projects. You know, there's a great career path available to people at TClarke. As I said earlier, there is no glass ceiling. And, you know, flippantly said, you know, I joined the business as an apprentice 34 or 5 years ago. So I'm a testament, there is no glass ceiling of where you can take this business. And, you know, for us, succession planning of a business is really important. We're not a privately owned business that, you know, we'll be looking to sell our business in a few years' time and all retire. We're a business here for the long term, grounded in what we do. You know, we want to service our clients for, you know, for years to come. And we will only do that with a good succession plan coming through.
Thank you, Mark. Moving on to the next question that's been typed in. This is perhaps a question more for a stockbroker than it is for you. This comes from a shareholder called Robin Penfold. Robin asks, have you been given any reason for why TClarke's share price fluctuates at such a large rate, either on a daily or weekly basis?
I think you should be answering this time.
Yes.
And feel free. But I think there's one quite obvious reason when you look at the share price movements, and that is that very often we have very little trading going on. So if I just look at this morning, I guess I last looked at about an hour or so ago now, and there have been 7,000 shares sold and about 18,000 bought. Now that's really low volumes, very low volumes on a week where we've announced results. And I think, you know, if we get, often we get low volumes being traded. And I personally believe that's one of the biggest reasons for share prices to fluctuate a lot. I don't know if you've got anything to add, Simon.
Well, in the context of there's 43 million shares in circulation.
Exactly.
Yeah, I mean, personally, I think that we work with a lot of clients who've seen quite volatile share prices, certainly over the last 12 months or so. And we live in very volatile markets. And in a number of cases, it's not due to a reflection of the company's valuation. It's a function of liquidity and some quite wide trading volumes, really. So yeah, it's never an easy answer, but I think most companies just get on and just do what they can focus on, which is delivering the best performance on the ground. So yeah. Anyway, we haven't got anybody from Senkos on the call, but perhaps they could answer next time. Moving on, just one more question. I'm just conscious that we're getting close to time. Again, this comes from Jason Nightingale. What area of supply costs area concerns you the most with regards to the high and likely to remain so for the oil price over the next 12 months, i.e. 120, 175, $200 oil price? So I think basically this is a question about supply chain costs.
I think, repeating what I said earlier, obviously we, depending on the type of project, we have a lot of copper and steel, both in terms of containment cable and within our equipment we buy. That's the area we're alert to, and we do monitor things like the copper price, but we don't try and speculate. We try and de-risk it as quickly as possible. And up until now, our supply chain will lock in and agree a fixed price agreement for their quotation as soon as we lock in that order.
Super, thank you, Mark. I'm just conscious that we're running towards the 12 o'clock mark, so I'm going to draw stumps there. Thank you, everybody, for your questions and comments that you've made. Jason, you've been very kind to put in the up-to-date numbers of shares traded today, and I think he's just put in that 8,000 shares have been bought during during this presentation. So there's a thing. Right. So look, thank you everybody for joining us today. I hope you've found that a really useful session, and thank you to Mark and Trevor for taking us through the results and where they see the business. Perhaps at this stage I can just hand back to Mark just for a few closing remarks, and then in the meantime, thank you everybody for joining us today, and I hope you keep following TClarke, and we will be doing these updates going forward. And the next formal announcement will be the company's half-year results, which will be announced in the summer. So thanks again this morning. Mark, let me hand back to you, and then we'll draw this session to a close.
Well, there will be a bit of a trading update, our AGM as well in early May, so there'll be a bit of a trading update there. And just on investor and shareholder engagement, obviously we welcome the opportunity to explain the message of TClarke's. We are probably the only listed M&E type contractor on the stock exchange, so it's very difficult to have a comparison, so it's good to speak to an audience direct. We are partaking in a Mellow investor event in Chiswick in May that we'll announce on our website soon. We only signed up for that this morning, so again, a chance to meet us face to face in Chiswick later in May. Look, I think, as I said earlier, to choose to invest in construction, you need confidence, and the record of this business in terms of being a market leader, a good reputation, a reputation that clients want us on their schemes, and ever evolving that offering across the UK. We as a board have got confidence in the business. Yes, there are some outside influences that are affecting everybody, but we're very focused on a target, a range of sectors that we feel can weather some storms and ups and downs, and will greatly improve where this business will be in 3, 4, 5 years' time.
Thank you, Mark. Thank you, Trevor. Thank you, everybody, for joining us today. And that concludes the session. Thanks very much. Good morning.
Thank you.